Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. I've kickstarted your week with a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Now let's take a look at a couple other currency pairs. We'll start with the dollar versus Canada. Looking at the hourly chart of this currency pair, there are two things that stick out to me. One is the price moving below the 100-hour moving average. That's this blue line in the chart. Currently comes in 135.227. Also below this, actually three things, I guess, below this swing area through here, where we had a number of different swing highs and swing lows in trading last week, and we came down to test the low of that and the 100-hour moving average, and then broke below it. Now we have this swing area and the 100-hour moving average up between 135.17 and 135.27, with the 100-hour moving average at 135.22 in between. If the price stays below that level, it's more bearish, and we look toward the first the 38.2% retracement of the last move to the upside. That level was also the low price from last Thursday's trade right here at the 134.96, and then if we get below that level, we'll look toward the 200-hour moving average at 134.80. So there's like 4 or 5 things that stick out to me here on this chart, including the 100-hour moving average swing area, the 38.2% retracement, the lows here, and the 200-hour moving average. So all those levels are in play in between the 100 and 200. And if we're able to break above this level, then the bias returns more to the upside, with the really this high swing area near the 135.64 level up to 135.85. If I go to the daily chart, let's take a look at that long-term view. And in between those levels comes a 61.8% retracement at 135.67. So let's earmark 135.67 on further upside momentum as a key level. We moved above it in last week's trading, but rotated back to the downside. But if we get above that level and above the high from last week, things are more bullish here for this currency pair. And of course, on the hourly chart, if we break below the 38.2 and the 200-hour moving average, things turn progressively more bearish for this currency pair. Let's take a look at the Aussie versus US dollar next. And as you can see, we are up testing in the late London morning session, early US session. The 100-hour moving average at 0.64228. The high price came up just short of that. We're going to need to get above that 100-hour moving average to increase the bullish bias. As you see in trading last week, the high price for the week from, I guess that's last Tuesday, did move above the 100-hour moving average, only to fail and rotate back to the downside, and eventually get below this swing area between the 0.6453 and 0.6458. If we break above the 100-hour moving average, that's where we would next target, followed by the 200-hour moving average at 0.6468. We did move above that moving average not last week, with the prior week, and failed. And you go all the way back to this day right here, which is in July 27th or 8th. For the last time the price really traded above that, well, really it traded for half of a day or something above that level. But most, you can see it's been a while since we've traded above the 200-hour moving average. But first things first, you need to get above the 100-hour moving average. You need to get above the swing area, and then we'll target the 200-hour moving average. If we stay below this level, the buyers remain, or the sellers remain in control, with the low price from last week as a target level eventually. If I go to the daily chart and look at that, what was the significance of that low last week? Well, we came down and tested this swing area back down here to September and October of 2022. Number of different swing lows and highs on the daily chart in this area through here. I'll outline them for you. And that level proved to be support in trading last week. Also, this downward sloping trend line cuts across within that area. That area comes between 0.6348 and 0.6363. Remember that level on the downside, or that area on the downside, going forward for the Aussie versus US dollar. Break below it, and it's more bearish for that currency pair. Finally, let's take a look at the New Zealand versus US dollar quickly. And if I look at the hourly chart, we are near the 100-hour moving average, like we are in the Aussie versus US dollar. We're still fairly below that, trading a fair distance away from that level at 0.5937. On Friday, the market tested it. On Thursday, the market tested it. On Wednesday, the market tested that 100-hour moving average. So 3 separate tests of the 100-hour moving average, keeping traders away from it for the time being, at least. But what we do have is support down here at the 0.5902, let's call it 0.5900 level. We need to get below that level to increase the bearish bias here for the New Zealand versus US dollar. So the buyers and sellers are battling it out between these two levels. If we break above the 100, like the other currency pairs, I would look for the 200-hour moving average at 0.5975. We moved above it not last week, but the week before, similar to what the Aussie versus US dollar did, and then failed and moved to the downside. So we need to get above that 200-hour moving average to increase the bullish bias. Let's take a look at the daily chart. And like the Aussie versus US dollar, there is a trend line cutting across. That level currently comes near the 0.5887, yes, and the 61.8% retracement, which we tested last week and today at 0.5903. So that 59 level is a key area for the New Zealand versus US dollar on the downside to get to and through. If we get below that level, then look for 0.5887. If you get below that level, it opens the door for further selling pressure in the New Zealand versus US dollar. So did not a couple, but three different currency pairs: the dollar Canada, Aussie versus US dollar, and New Zealand versus US dollar. Hope this helps you and kickstart your week. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.